Alright, fellow meme stockholders, XMAX Trading here. Got some Xela FUD. It's pretty interesting from an investor place. Xela is likely to tumble on debt issue and meme stock weakness. High debt and lack of growth spells trouble for Xela stock. Xela has some interesting products and niches, but given the company has high debt, lack of growth, low margins, for a software maker, investors should sell AMC stock. Or Xela stock, sorry. So this is basically FUD trying to get you out of Xela. And it's also likely to depress this meme stock in the short term and medium term. This is ongoing weakness. This is the ongoing weakness of meme names. High debt. Xela's total debt was very high, 1.63 billion. That's a very high number because total revenue was 1.3 billion, while its 20 operating income was a negative 12.7 million. Making matters worse, nearly all of its debt, 1.5 billion to be exact, is maturing within 2 years now. So Xela is going to has to find a way to pay back a great deal of money relatively soon. In recent years, months and years, the company has come up with the funds to pay its debt primarily by issuing additional shares of stock and selling a number of its businesses. Earlier this year, the company sold $100 million of shares and intends to market another $150 million later this year. Meanwhile, Seeking Alpha author reported that Xela sold off its logistics, physical and storage, and sourced HOV tax business in 2020 for about $50 million. A vicious cycle. I says to pay its debt, Xela has to issue even more shares, unload more businesses. I agree with the prognosis. Unfortunately, selling more stock will lower the value of each share. Unloading more business will further reduce the company's revenue and profitability. So Xela looks poised into a vicious cycle of declining revenue. Stock sales will sooner or later cause the value of shares to drop further as the value of stock falls. It will have to sell even more shares, unload even more business to pay off that debt, and later action will lead to further revenue declines and fully restart the cycle. Even before having to sell off more businesses, Xela has not been growing. The company's revenue in 2018, 19, 20 came 1.2 billion, and the same year, the company's operating income came at 428 and negative 12.7 operating cash flow. Finally, it's often referred to as a software company. Xela is actually specialized in labor-intensive outsourcing work that carries low margins, as a note, and results in gross margins of just 20%. Some promising signs. Xela's former CEO Ron Cogburn said last year the Digital Assets Group was purpose-built to foster innovation and drive growth in digital assets, indicating DAG carries very high margins. He added another critical aspect of our digital assets, our ability to see these solutions to multiple clients with very little customization or the need for professional services. Two of the company's offerings appear to be a part of the DAG. Digital Mailroom DrySign grew meaningfully in Q2, with DMR delivering a growth rate of 98% in its SMB customer base and DrySign delivering growth rate of 144% in its user base versus Q1 Xela state. But unfortunately, Xela and the owners of Xela stock, DAG, only consumed 8% of the company's revenue, and Q1 indicating that DAG growth had become a classic too little too late for the company. Similarly, Xela signed a 10-year, $90 million to provide PCH Global Digital Exchange Platform by a major U.S. insurer. This product will process health insurance claims for the insurer. While this sounds like a promising business, $9 million a year will not move the needle much for Xela stock, and the company probably will not be able to ramp up the business quickly enough to be able to handle its debt, tremendously lowering the value of shares. Tough times. Oh, here comes the punch, guys. Tough times for meme stocks. Reddit users have shown a great deal of interest in Xela, and the stock has rallied sharply in March and July. No major news other than Reddit mentions indicating Xela is a meme stock name, but as I pointed out in past columns, this is not a good time to invest in meme stocks with poor fundamentals. As the federal government's stimulus checks fade away into the past, young people start spending more money on social activities, and the end of unemployment insurance bonuses rapidly approaches. Indeed, since reaching July peak of $4.35, Xela has stumbled 25%. Bottom line, Xela, high debt, lack of growth, losses combined with weakness of meme stocks indicates the shares will enter a vicious cycle from which they'll probably not emerge for years, if ever. It's possible that Xela is acquired by a company that interested in its DAG business for that reason. Shorting the shares is somewhat risky, but in all likelihood, potential acquirers will wait for Xela stock much further before making such a move. So Xela had numbers that are similar to its competitors, and its competitors are like $100 a share, $200 a share. So, be interesting. It seems like a fun article trying to get you out, but be interesting what happens with Xela. So, all right, guys, see you later.